analysts at NASD said the interest rate hike by the Monetary Policy Committee in Nigeria is crowding out investors at the unlisted equities market as attention shifts to the fixed income market despite its negative real returns on investment. Oludare Fajimolu, Head of Research and Strategy at NASD, joins me for this discussion. Oludare, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
First, I'd like to get your thoughts. We're still asking our analysts, everyone, for their thoughts and takeaways from the MPC meeting. So, of course, concession was for definitely a rate hike, but it then became by how many basis points? But then we saw 400. But what were your initial thoughts for you, and what were your key takeaways?
So, my initial thoughts were this is the first MPC meeting that has been chaired by the CBN governor, and so he needed to set the direction for the monetary policy, and so that's why I believe part of the reason he made that statement, or as a team rather, the MPC committee meeting, the MPC made that statement in that direction. That is where they see the monetary direction of the economy. But in terms of its impact, yes, naturally it will favor, or rather investors would be more attracted to the fixed income space definitely because of higher yields and so forth. And then, but the flip side is that the issuers would now prefer to raise equities because that is a long-term investment, and it's also going to reduce pressure on their own cash flow. But so there needs to be a balance at some point between the preference of investors, which will be the fixed income space, and the issuers, which is the companies that will be seeking to raise capital, especially the first-time issuers or additional issuers.
But wouldn't that be commercial papers for those issuers? I mean, for the corporate, or are we saying we're saying different things? When you say for the corporates raising cash, could you just shed more light on that? Okay,
so the preference naturally for issuers is to conserve cash flow, so that they can plow back profits in order to grow the business, especially in an environment where we have in a high inflationary environment, and then cost of debt is now increasing. So their preference would naturally be for additional equities. So, but naturally, investors in this scenario would prefer the fixed income space. So when I say that the issuers will prefer that, so that's primarily for additional capital raise. That's where they will be looking at. So I'm expecting an uptick in primary market activities.
Okay.
So so primary market activities, and then it's not restricted to the public companies alone. So several private companies, for instance, on our enterprise portal, which is structured to cater to the capital needs of SMEs, we are seeing increased interest. Actually, from last year, it's been building. So we're seeing increased interest in that space. Companies trying to approach the capital market for the first time. SMEs trying to approach the capital market for the first time, and trying to do it in a structured way. Because that is like their initial interaction with the capital market, in the anticipation that they will eventually get to the stage where they can be boarded onto the main exchange.
Well, that's quite interesting. But how are they processing a monetary policy direction? Because we're seeing this stance by the CBN now. There's another meeting next month where we're not sure if, because 400 basis points was quite steep, and when he then says there's going to be another meeting next month, for you, is it a meeting to see if there's been any impact, even though it would seem that 4 weeks, just 1 month, might be a short amount of time to see any impact? But I guess the MPC may be thinking differently, but what do you think?
I think it's a matter of trying to assess, yes, it's to assess the impact, in my opinion, and because of the sharp increase in the rate, there's probably the need to have a close watch on the initial impact without having to wait for how long, to wait for the traditional 2 months period and so forth. So the MPC might actually be looking at the initial stage, because these are early stages. The environment is quite, that's the fundamentals of the economy, is quite sensitive right now. So inflation is like almost 30%. Forex challenges are there. So you want to make sure that you're monitoring things as they develop. So I believe that's part of what the MPC is going to try to achieve.
But what do you think about, I mean, the set targets, 21%, that's inflation for this year. We're almost at 30%. Negative real returns still at the fixed income market, but I know that there is a focus, at least I would believe that much is clear, to attract FPIs and to ensure that the MPR or yields are higher than inflation, so that there's a positive. But the question is, how soon can we get there?
It's difficult to say how soon. To say that to set inflation for 21% for this year is a tall order. I mean, a lot of things will have to happen. So on one hand, there is the monetary side of it, and then there's the supply side of it. And the supply side is being challenged by infrastructure, is being challenged by several other things. So say food, for instance, which is the main driver of the inflation.
I think that's about 35% now.
Exactly. So and then we have insecurity. Part of the reason for that is because of the insecurity in the food producing regions of the country. So until those factors are addressed, and then the supply side can also align with the monetary policy, then that's to say we are going to have to set a target of 21% is going to be very difficult, because that is the side that other side is also actually is going to be a main driver of how inflation plays out. But
do you see more FPIs coming in? Because after we're going to have a conversation on the currency shortly. Do you see that driving FPIs? I mean, that's not just a signal. I mean, actually, sucking money from the system and, driving yields higher. Do you see this significantly increasing FPIs into the market or the economy?
I think not immediately. They would want to wait for, they would take a wait and see approach, because it takes time for these things to eventually, which is part of the reason this MPC perhaps is also trying to meet next month to try and assess the impact. So it's also going to be the same position that these foreign investors would also be looking at, to try and assess the impact and see how things are playing out, because what their main concerns are things around liquidity and the stability of the environment,
and to what extent they can exit with their cash and availability of the dollars. But Oludare, we'll leave it there. Thank you so much for talking to us. It's a pleasure to have you on show. Oludare Fajimolu, Head of Research and Strategy at NASD.